All right. Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, February 8th, and we are on the eve of the highly anticipated inflation read, guys. Good to be with you this morning. Agnes, Steve, Ted, Ziad, everyone in the room. So I don't have much to go over. We're going to go over all of the setups that we've been tracking. Markets are stuck in this kind of crunch. You saw, obviously, which is our intent, as we always say, to kind of be very cautious into the monthly open. You saw some pretty radical moves, right? Strong dollar surge, slams back down, and we've basically been on that back burner. So lots on the menu, but I don't think we'll get too much volatility until we get through that inflation read. Again, we'll speak again on Thursday before the release, so we'll get another picture. We're heading into that 8:30 print as we open up the webinar, kind of gauge where we are. But the story is a little bit murky on some of the majors. So look, here is the menu for today. We'll hit, as always, DXY, Euro, SPX, dollar CAD, Kiwi dollar, gold, Bitcoin, Aussie dollar, and sterling from last night. Any other questions or trade setups? As always, feel free to throw them on the message board at any time. So here's where we stand on the dollar. This is what the dollar looked like back into the second as we were opening up the month. You know, the weekly chart. Here's what the weekly chart looks like now. You know, we really came off median line resistance, pulled off. We cited that October 2017 high as support. That's where we slammed down that week. That was 95.15. That's still support for the index. We haven't really done much. We're essentially right back at the objective yearly open. So you have a lot of trades that are like that. British pound also at its objective yearly open. So essentially putting in a doji so far for the year. Weekly chart, daily chart didn't look all that much more exciting. Again, that 618 retracement was a little bit of an area of interest as an initial support barrier there. Here's what it looks like now. Okay, we ran right through that 618 into the low day close, found support there, and here we are right back at the 618. Again, the yearly open, last month's open right here. So no change there. Those levels remain unchanged. Here's what the scalp looked like into the start of the year. Basically looking for the possibility of uptrend support. Here's what it looks like now, right? So a little bit, I do have to say, this is a little bit different of a slope, guys. Not from this high. We set it back to the highs that we made back on December 19th. Gave us a little bit better of a slope. But at the end of the day, you know, what do you do with this? Here's the 2 hour. What do you do with this? The weekly opening range is set right above the low day close for the year. That's 95.16. Again, same levels we were looking at. Here's possible upslope resistance converging on the same level. Looking for reaction here. If I sound a little bit, you know, frustrated, it's because even if we get the break here, guys, I really want to caution you heading into this inflation read. We're supposed to see a print of 7.3%. That's a new 40-year high. Inflation expected 5.9. Now, I'm not saying that read is why, you know, I don't want to necessarily play the breakout. It's just that if we get the surge, you're likely to see it a pullback. It's a fadeable event before the actual move happens. So that's all to say, stay nimble here. Stay nimble here. I think there's a lot more action on the crosses, more so than the DXY. So gonna move through these pretty quick. Any questions on DXY? Okay, core inflation is expected at 5.9. We got a 5.5 print last time. So we'll see how that pans out tomorrow. Resistance 95.70, a breach above 90, a breach here looks for 96. That's your critical resistance. The 2020 yearly open, the 618 a decline, the median line, a break above that would put us back on the resumptive path for dollar. That being said, you know, I was talking to a good friend of mine who actually I haven't talked to in a while, works at another desk here in New York, and we were talking about the dollar. And look, I think there's some serious technical damage that was done with this move. You know, it's got all the hallmarks, divergence on the weekly into resistance. It's got all the hallmarks of the possibility of a larger correction, a larger fail to the downside. He gave me a litany of fundamental reasons of why the dollar would be a good candidate for a major setback in the months ahead. Of that being obviously the inflationary problem running hot, and all this such. We're not there yet. You know what I'm saying? At the end of the day, we're still on the right side of a major multi-year trend line. So, you know, this is why we have technicals. Okay, at the end of the day, 95.15, well, that's going to be a teeter with that red trend line. We break below that, that's just a pivot. You'd look lower inherently. Till that happens, it's still a setback within the broader uptrend. So just some food for thought there. You know, the risk is there. I agree. The technical damage was pretty profound. If it breaks down further from here, but till it breaks, support is support. All right, so that's my little spiel on DXY. Number one. Number two, Euro is not that much better. You know, yesterday someone asked about, before I move into Euro, yesterday someone asked about yields. Guys, this is big. Here's the daily chart on the US 10-year yield, okay? We've been talking about this 191, 194 region for a couple of weeks. We failed back here on the initial advance back in January. Here's a consolidation, break to the upside, back at resistance. We failed there for 2 days. If today closes, and that's important, if today closes above this level, you're looking for a run to the median line. You're looking for twos, you're looking for 215, 214. Okay, there's really nothing in this zone. So if this breakout's legit, expect a little bit of a run higher here in yields, down in treasury prices. Okay, very important to watch this here today. And it could give the dollar sort of the basing that it needs to kind of alleviate some of the downside pressure, but just something to keep an eye on to the close of trade today. Euro looks like this. So from the Euro standpoint, again, it's a very similar situation as DXY. Here's Euro on the weekly, okay? We went over this in the webinar. I'm pretty sure I saw all of you, or I tend to try to look for all of you guys in the morning webinar. There's hundreds of people in that webinar, so I can never get a fix on who's who, but we did go over this yesterday, right? Big old reversal candle last week, essentially took out the monthly range with that one move, puts you back above downtrend resistance here. So is that a breakout? Well, not just yet. We're still in the yearly opening range. January highs are still there. You have the swing highs from the 2019 high day close, the 2020 opening range highs. You know what I mean? It's a big, big zone. That's 115 on the upside. Not there quite yet. Here's what Euro looks like on the daily. Possible slope in play here, right? Possible slope in play. Again, here's what it looked like on our last update back on the 3rd, right? Oh, sorry about that, guys. They didn't expand the charts right, but 114.45. Okay, 114.45. That's still the level we're looking for resistance. We're still right there, essentially. You have the entire upper parallel for the pitchfork there. You have the close highs from January right there. You have the 2019 yearly open, again, on a closed basis. Look at that. So from the weekly standpoint, it's the same exact trade. You're at broader downtrend resistance. You're setting up the monthly opening range right below. You're still constructive essentially while above 113.30s, 113.20s, the median line there. So daily chart, again, I'm not operating on either of these, DXY or the Euro, because I'm looking for clarity. Here's what the start of the week looks like. It's pitiful. If you're holding a short against that, against the Friday high, I think you're good. Bring that down to 14.45. You're looking for 13.83 as a soft target. That's the objective yearly open for this year, okay? And then a basic 38.2 gets you 13.45. So a better area to look for, again, more basing, an exhaustion low, could be, if you look at this in time, as you head into the 10th, when we get core inflation data here in the US, that could be the exhaustion high for the dollar, sort of the pullback before it moves higher. Again, this is dollar weakness if we rebound, right? Euro dollar higher. So end of the day, I really don't have a fix on either of these until we get through that major event risk. I think it's going to be really profound to see how the markets react. Again, we're already expecting a 40-year high. So we're trading the deviation from that expectation. Support, again, 1345 on the upside, need to break 15 to validate a larger move here to the upside in euro. Any questions? It's like trying to pull teeth here with this with the euro trade, but I suspect this will all move as we get through that event risk later in the week. A quick look at the SPX. All right, take this from the top down. Again, I showed you this yesterday in the webinar, but it's worth looking at again to remember where we are in trend. All of this based off the original slope. We tested the original slope as resistance last week. It failed, closed well off the highs from that slope, and here's where we are right now to open up this week. Okay, resistance 45.35. Bearish inval at the high we closed, that's 46.77. Initial support, you're still going to eye that 52-week moving average near 43.64. And on the downside, I mean, maybe it was too much to ask for. You know, the original sort of drop and breakdown, we were looking for a tag of that basic 236 that advanced off the 2019 lows. It's 41.97. We didn't quite get there. The low was, I think, like 42.20s, 42.22. So that's the risk, guys. If we turn and this is a break of support, test as resistance and move off, then the corrective move would still beg a touch at least of 41.97. I don't know if we're quite there yet. We haven't gotten, you know, the jury's still out on that. Here's what the daily chart looks like though. Okay, this is the daily chart. Looks more like this should be the intraday chart, right? Again, here's the start of the year. Here is your monthly open. We should put a marker here for your monthly open, but here it is, right? Last month's opening range broke to the downside, and on the 18th, you got a nice drop and a low marked on the 24th. Here's this month's open, okay? Rallied right into the 618 retracement. Here was our last update on the SPX. Okay, so I'll show you the intraday chart in a moment, but the 618 retracement was the focus after we bounced right off that and pulled back. Here was this really sharp uptrend that we were following. So you're looking for either a pivot break above that 618 retracement for the resumptive trade, or a drop back below that uptrend to suggest you have more to go. Well, here's what happened. Okay, well, I guess I just deleted that this morning, but just for argument's sake, okay, rallied, broke. Here's the bounce. We broke below it, and I talked about this yesterday, and we checked it as resistance. And what did we do yesterday? Chop, chop, chop along that slope. Support still 44.51. If you get the break, here's your pivot point. The 618 at its near-term rally gets you 43.63. That's on the median line. That's on the median line. So that's still sort of the focus, the risk, as it were, while within this formation. I wouldn't want to, yeah, I see your question there. I wouldn't want to leave bearish, you know, resistance way up here. At the end of the day, if we break through the upper parallel, that's enough for me to kind of bail on that idea. So something like this, ahead of 45.90, you know what I mean? Like 45.50s would be a little bit more of a prudent, if you want to be a little bit more conservative on that, as sort of, okay, we bail off that region. Again, we've gotten multiple touches on that slope, right? Touch, if you want to call that a touch, just missed it. Nice inflection along the median line, perfect touch, break inflection, resistance. You know what I'm saying? So it was here perfect as like the key resistance breakout zone. I moved that down. The 618 is still kind of the resumptive move, I think. But while within this formation, you know, the threat is still for that drop. Ty says running late. What did I miss? Hey, Ty, we just missed DXY, Euro. This is our third one, SPX. Here's the dual screen for the side-by-side picture. I saw you yesterday, Ty, in the webinar. No change, believe it or not. Here's where we were yesterday. Remember we were talking about we broke, we checked his resistance. Yep, it just continued to move right off. So as is, likely to go into, the markets are likely to go into a holding pattern. Maybe not today, maybe like tomorrow midday. There's a lot of focus on this inflation. Remember, especially with the strong NFP numbers we got last week, the Fed's dual mandate, price stability and maximum employment. If employment is at the quote unquote natural rate at this point, it really is all about the inflationary outlook, and their hands are tied. They have to start not only QT, quantitative tightening, but also raising rates. It's going to be an interesting few months, guys, but should make for some great volatility. If we have time, yeah, I'll take a look at the NASDAQ. Yep, Ty, remind me. Well, I mean, it's right here, NDX. Here you go, buddy. Let's not dilly-dally. Here's NDX number 4. I don't have any updates as far as this. I haven't really been tracking this day to day, but before I even get into the intraday, I want to highlight that the daily chart, you asked about this probably a few weeks ago, Ty. It's the same exact pitchfork. Look at that. I mean, you can't make this stuff up. Insane. Along the support, rebound has already made it through the median line here. So let's clean this up just a tad, shall we? This is actually a lot cleaner than. So here's the retracement of the 2021 trading range. If you're wondering what that retracement was, that was huge support right there. This is near-term support right now. Probably should have been doing this on the scalp, but just bear with me. Okay, forget that 38.2. There's the monthly open is resistance here. Okay, here's again, this is the daily. So you have monthly open resistance at 14,966. Near-term support at 14,455. That's essentially the swing lows that you made back here in July and the close low for October. So a little bit of a cleanup here. Looks like I started to check out these same levels here and just put your monthly open. That's your monthly open near-term resistance right now. All right. And here's the DXY real quick for you, Ty, side by side, because we already covered this. All right. So with that said, SPX and DXY kind of, or SPX and NASDAQ, kind of a look at see that, okay, we've gotten the pullback. We're still within the confines of this near-term downtrend. Have we cleared it? Not quite yet. A trade that's sort of made a very wicked reversals, number 5, and that's dollar CAD. Here's what dollar CAD looked like on our last update. We had made the breakout. It was a great trade last week. Real crunch into that 38.2 retracement, finally broke to the upside. Initial targets were 127.24, 27.67 was the big level. Remember, that's the level we needed to clear to kind of really move, clear the way for a larger resumptive trade back towards the upper parallels. That was the high. We failed. We pulled all the way back, and we're right back here again. Here's dollar CAD now. All right, so what do you do with this? What do you do with this? We just pulled right back into that 38.2 and we're sitting right here. Well, I'm inclined to dump this slope altogether, right? We already got, its purpose has been essentially fulfilled at this point. I was looking at some possible slopes earlier today. You could get something like this, right? That would put resistance, keep that support and focus, really highlight the 2022 open again, which was our bullish inval last week. But doesn't really define the price so well. You know what I mean? Maybe some play along that. So I don't want to stick with this. Long story short, I kind of just want to see how this plays out into the open of trade today. You got the weekly open pullback into support. Here's your weekly open. Here's that 618 where we failed last week. If that breaks out, great and dandy. If not, I think you get a consolidation here. I think you get a crunch. Here's what it looks like on the daily chart. Just a reminder of how clean this trade actually was. Right into the start of the year, dropped into key support, 2 equal legs off the high, very clean, 786 off the low, uptrend support. Here's the rally into the yearly open. Here's the breakout last month. Ever since then, it's been a crunch. Lower highs, higher lows. So I don't think it's worth taking a strong stance in either direction here. I think the threat for a deeper pullback is kind of the focus at this point, now that you've failed 3 essential tries to break it over that 27, 28 handle, or 2780 rather, region. But continues just to put the focus on this. So we'll watch for the weekly opening range. Again, another dollar that's in the crossfire, right? The crosshairs are on it, but not quite a play for us here just yet. Questions? All right, that's number 5. Number 6, here's Kiwi dollar. Here's what Kiwi looked like on our last update into the start of this week. Not much play, okay? The focus for me has been the rebound off this 618. As we said, last week on Kiwi, we marked this outside daily reversal candle right off the highs here. And I wanted to see how this is going to pan out this week. If that outside weekly or that outside daily reversal is going to give us a deeper cut than that, the first initial support zone is right at the monthly lows, is right at the monthly open, is at 65.75 on the downside. So again, if this support break is legit, run into it as resistance, basically these highs should hold, and you'd be looking for that last drive towards 64.88. Now again, that's a dollar strength story. So not necessarily wanting to take a very strong stance on that heading into CPI in just a few days here. Here's what it looks like again on the intraday. Looking for something a little bit clearer to define what we're seeing in price, but guys, we just got to recognize when the opportunity is there and when it's not. Real strong, real soft rather rebound, lots of chop back and forth, no uniformity, no structure. Levels are unchanged, okay? 66, 67, still kind of my line in the sand. If we buckle through that, great. We're off to 67.50 and beyond. But until we do, this looks pitiful. And then if we get the dollar strength story, well, then a break of the monthly opening range low, that's the trade. If we get the dollar weakness story and dollar completely collapses, a break of the monthly opening range highs, that's the trade, right? Up here. It's literally come down to that on some of these setups as we get into the monthly opening ranges, which are tight and contracting ahead of major event risk. So New Zealand dollar, you're off on Kiwi data for the rest of the week. There's nothing on the docket really of note. So again, it's going to be a dollar driver here. Number 6, any questions on Loonie? Some more interesting things on a brighter note, as FX continues to range and coil, here's a good look at some of the major commodities and how they're faring right now. Gold is coming into the first major level, 1830. It's a level that we've talked about for a very long time, since last year. Here's the December rally. That's where we closed. It's this year's open. It's the 618 of the November decline. It's loaded. It's the July high day close, a major pivot in price, and that's the level that we've been focused on. Once we crashed below it again here last month, pulled all the way back into key support. Again, I went over this in the webinar, 618, awesome support on a closed basis, like a charm. And here we are sitting still above uptrend support. I want to take it back to the weekly chart just for a moment to show you this. And we went over the fact the last couple of outside weekly reversals that we've seen in gold, the average decline was somewhere in the range of like 14% off those highs. Nowhere near here, but we're still in that key range, contractionary range. Lower highs, higher lows. Key support still 1791 on the weekly chart. You got the 52-week moving average, the 618 of the November advance, and that's also the yearly and January opening range lows. So beautiful spot to rebound off, but we're still not out of the woods yet. Still in this contractionary zone, right? That's the weekly chart from 1,000 feet up. Here's gold on the daily, okay? Essentially what you're looking for heading into February, the start of March, is a break of the January range, namely and simply put. First level of major significant resistance right here is 1829. Need a break above 1850 to validate a breakout of that multi-month, multi-year consolidation, right? So if we break here and close above, it's different from here because at that point, it's going to necessitate that we've broken out of the consolidation zone, or that multi-year, multi-month downslope consolidation right here. Higher, lower highs, higher lows. So the levels are clear. First level on tap, right here. 1825, I extend that zone. That's the near term 618. It is just this drop off last week's, or last month's, I guess this is, yeah, last week's high. So you got 1825 into 1829. Look for a reaction here today. Here today. Okay, I'm going to zoom this out for a moment. I don't have too much stock in this downtrend, right? We really haven't gotten many inflections off it yet. Looks like the 25% parallel held. Median line I'm not really crazy about. Looks like it could be a break and test of that slope, but at the end of the day, we don't have enough on this one. So the focus is on this upslope that we've been following. Nothing changes. Nothing changes. Here's our last update on gold. Okay, so this is the same upslope. The 50% retracement we've already taken out. I've removed that. Here we are. Okay, here we are. Pay attention. Resistance 1825 into 1829. If this pulls back, if we are heading higher, weekly open support should hold. Like this. Okay, bullish invalidation, 1791. Near-term support. Focus is higher above 1807. Key resistance, a topside break from here. You're looking at it, 1850. 2021 high week close, 1849. The 786 of the pullback off last year's high there at the end is 1850. It's a beautiful spot. Beautiful spot. I'm still long from last week at 1785. Man, you are killing it from 1785. All right, so this is your first spot right here. Look for a pivot at 1825, 1830. Okay, this is what I'm looking for today. You could get something like this, a couple of kickbacks. Ultimately, any plays should be this kind of reaction. Should be a strong, it's a low tolerance zone. It should be a strong inflection, or if it breaks, it should give you a runner. You do not want to see something like this in this area. Okay? Your best case scenario for gold. My best case scenario for gold is that maybe you get some failure here and pull back. Don't even make it into the weekly open, maybe into slope. Maybe you fail ahead of it, but then you buckle higher and rally into 1850. Now, this is especially going to be interesting this week, man, because we're heading into the inflationary read, which is one of the base case scenarios historically for the bid for gold, right? A hedge against, inflationary pressures being one of those primary risk assets. So if the inflation runs even hotter than expected, if you get an upward revision to last month's inflation read, which again, last month we got 7 flat, right? Maybe get an upward revision. You never know. But that's going to be the biggest sort of inflection, the biggest trigger, the biggest catalyst for gold in the next few days. She says, yes, I know on Thursday, right on. So, Amen, I hope that helps. Nice trade. Watch 1825, 1829. here today into the US trade session. This is big. All right. Alongside that, it's going to be also a very interesting look at what happens today in Bitcoin. Iman says, yes, always help. Thank you. You're more than welcome, Iman. Well done. Well done. A quick look at Bitcoin. This is important because if this breakout is legit, we should be seeing something pretty darn soon. Here's what it looks like on the daily chart. And here's our last update on Bitcoin that I give you guys into the start of the week. So uptrend resistance. It looked like we were flirting with something right here. If you looked at it on the near-term chart, it was also downtrend resistance. So I was looking for some sort of play, some sort of inflection. We got a break the following day, I guess yesterday, and it did accelerate. Here's what it looks like. We closed higher, way higher, 44,000 and change. So if this breakout is legit, essentially you're still constructive above 41.5 right here, looking for a major resistance right here at 46,700, 46,200, this zone right here. This is also the yearly open, last month's open, right? So it's also downtrend resistance. So a big spot of which should be a stronger inflection, a tell on price. Here's what these scalp look like. Identified this slope. This pitchfork is just a match of this basic trend line. We were looking for inflection off that zone. If that support held and we got the break, here is key resistance. Here's key resistance. Here's what the scalp looks like now. Okay, the median line is holding, but we didn't quite make it into that resistance zone. So we did break, probed higher, holding that median line, didn't quite make it to that 38.2, the objective yearly open. So look, if this pullback is legit, like I said, 41.5, 41.4 should hold support, like here. Maximum here, that's still your key resistance and your breakout zone. So breach close above 46,720 is still gonna, that's what I'm gonna need to see to kind of validate this larger reversal. And guys, objectively, that would be a break of the yearly opening range highs. Here's your January open. So breach of the yearly opening range, possibly. It's make or break here. It's make or break. Near term, expect a pullback. Look for 41,500 support. You're seeing momentum here has not only gotten divergence on those last two highs, as price action made a higher high, the oscillator made a lower high, a weak signal because it's so high above 70, but here's the 70 break. So this is essentially still a risk for a near-term pullback. On that pullback, these need to hold support if we are heading higher. Any questions on Bitcoin? That's number 8. Ether is the same. I would say it's a very similar outlook. I don't really have a near-term scalp on Ether, but this is a very similar scenario in that here we've actually completed the 38.2. So I would expect to see the pullback here as well. Weekly, monthly open support needs to hold there at 27,000 or 2,700. The actual level is, let me get the actual level. So your monthly open is 2681. 2688, I'm sorry. Yep. But this is the first like inflection. For Ether, this might even be more important as your primary inflection here on the downtrend. Watch today's close. Watch today's close. Okay, so that's Ether real quick. Look on that. Last night's update was on Aussie and Sterling. Look, neither of them have really done anything still, but especially Aussie, I'm really interested to see how this pans out. For the British pound, I guess let me start with Aussie. For Aussie, we've rebounded off of such a critical support zone. We talked about this yesterday, the 69.90, basically into the 70 handle. Can't talk about how many times we've seen major inflections, the lows for the years that we saw here in 2018, the 2019 Open. Here's your 2020 high, opening range high, right? And the 2020 Open. Break, acceleration, support, last year's low, the January low. Here's the rebound. So all things held constant, 70s rock solid support. That's basically all you're playing off of. Aussie dollar in the daily chart looks like it basically made test and essentially testing another major rebound off that level. Now again, we're still within the confines of essentially the yearly downtrend we've been in. It's not breakout yet, but boy, oh boy, it's coming off some pretty major support. So yeah, I do think you eventually rebound and make another high here. The point is being, what inflection do we get, if any, to kind of pivot to the upside? Here's what the intraday chart looks like. Here's what I showed you guys last night. Haven't gotten much play, okay? So all we've done is kind of chop a little bit more sideways. This is the 4 hour. Here's the 2 hour, some consistency here. Just a slow grinder, hasn't done anything. If you're holding anything on the long side, weekly open support is 70.75. Look, for me, again, ideal scenario, pistol to my head, if we get a surge in volatility with the inflation figures, this is loaded on the downside with support, anywhere from 70.75 to 70.45. That's the 618 of the near-term rally. That's your weekly open. We just talked about how critical 70 is. So I can't get excited about like actually taking a short on this, because this is just such a massively critical area of support. We've seen every rebound, every inflection off the zone, what's happened. So it's either a deeper setback for me to be able to fade it, or if we get a sort of failure, try to break out, we fail into 71.80. If we get an exhaustion and a pullback to close back below that, that might be an opportunity to fade. But from here, there's nothing for me. There's nothing for me. Another one that's, again, shelved for now. It's on the watch list. I was hoping to get sort of a little bit more of a tighter opening range, as we did on some of the other majors like Euro and all that, but we just got this stretch higher. That's all good and dandy. We'll see how this pans out as we get into the inflation figures. All things held constant, we're looking for inflection off of downtrend reason. So I'm looking for a reaction up here. 71.81 is bearish inval. Now, in the event of a topside breach, yup, 72.50s. Yeah, I'd have to say that's your first spot. The yearly open, 72.70. That's critical. That is critical. It's not even highlighted here in the daily. That's right here. But we need to break out of the downtrend yet. I still can't, mark that. But that would be 2 equal legs higher. So even if this is just a corrective bounce, yeah, 72.50 shouldn't be all that far-fetched. Hey, Rohan, joined late, covered the SPX. Yeah, we did. We covered the SPX earlier in the session. So again, I'll have this up really early for you. Hey, no change from yesterday, Rohan. If you heard our discussion yesterday, no change. It's just a pull back. We're still within that downtrend, still focused on a breakout here with major inflation data on tap. Last but not least from my list is the British pound. Here's what sterling looks like. It's the same setup essentially as Aussie. We're looking for a play here. Opened the week and done jack. Haven't done jack. Pulled in 50% retracement. This one is coiling up into a decent weekly opening range, but haven't done anything on this one yet. We're straddling the yearly open. I mean, talk about like the most least exciting thing that you can find. So again, my shotgun approach is maybe you see a deeper dive, but you want to fade weakness. Sterling has been rather resilient in the face of all the dollar strength we've seen. So possibly a good competitor here if we see a failure and a pullback into like into the 618. Don't want to get that low, but if we get into pullback into here, maybe for a drive towards that 2021 open. But no change to any of those levels from last night's update either. Listen, sit tight. If you're kind of looking for something and you're getting some FOMO because you want to get, it's not the best time to jump into things half-heartedly. We should get some clarity on some of these trades heading into that inflation read. Been looking at a lot of different things. Even if you look at the broader equity markets, they still beg. Here's a look at Tesla. I've been tracking this one very, very closely. Still think there's a risk for a spill there. Back towards that 88.50 support. Microsoft has also made a pretty strong rebound off downtrend. You know, is that correction over? Don't think it's quite over just yet. Looking for that moving average, maybe another drop towards 290 to pick up some more. There's a lot of things that are on discount, right? If you take a look at, I think, which one was it last night? One of them just collapsed after the earnings call. But in any event, there's a lot of things going on. And point being, we're looking for clarity on some of these dollar moves, specifically on the inflation read. One thing I did want to talk about just briefly, I posted something yesterday about this oil. I do think this is an important thing to take note of. Guys, I've showed you this chart time and time again. This is the weekly chart, US oil. Here's what CL1 looks like, the futures contract on oil, right? For some reason. Oh, let me go to the daily chart. All right, I'm sorry. My trading view sometimes wants to misbehave. Okay, in any event, here's where we turned from. I just wanted to show you this because it's absolutely phenomenal. Weekly chart. We talked about that 618 retracement. This is from the decline off the highs we made, again, in 2008. I was a little disappointed. I was hoping to see a larger sort of major inflection off of that 618, but you always have to remember one thing, guys. Every measured move that we've taken, and I said this for the last couple of years, every move that you've taken on a measured rally, whether it's the extension or the retracement, you're dealing with the zero drop that we got in 2020, right? Futures market, CL1 is going to go, you know, into the negative, the $40 negative print that we saw. So depending on what you're using as the feed, with the extensions, the retracements tend to be a little off. So that's why I don't want to stress that 618. The real focus is really just on the slope. Very plain and simple. Plain and simple. Here's what it looks like on the daily chart. Again, just insane, right? Same pitchfork. Resistance, 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 right? It's been a phenomenal rally. The last time we had a rally of this many consecutive days was here, and that was this high. That was one more week of rallying before we turned. Before that, well, here was another just shy of 7 weeks. But you see the point. And it all suggests that you may be at threat for a little bit of a pullback. Again, divergence, we've been talking about this one since last year. Series of higher highs, series of lower highs. So the hallmark from a technical standpoint is there for the exhaustion pullback, okay? From the longer term aspect, from the fundamental, not a damn thing has changed. And in fact, the story actually might be getting even more bullish if tensions continue to mount and you get all this geopolitical sort of turmoil starting to filter into markets. So it's a bullish trend. You're at uptrend resistance. So it's important to keep in note two things. Ultimately, we're looking for support at uptrend support. And with the same respect, if we break out here, it's likely to be an accelerated rally, like a real ripper. A breach of uptrend resistance is typically the sharpest part of the rally. That means anything northbound of 93, you're essentially looking for a rally towards 100. That's just the initial target. So just some food for thought there as well. Again, at a very pretty important possible inflection point, in my opinion, You're looking for weekly open support right at 88.12. This is your bullish inval. I don't think you get anywhere near there. Bigger support is going to be at the January 2010 high. That's right here. Decent pivot in price. Converges on the 75% parallel. And that's a little bit lower, near 87.14. All right, so fill up your gas tanks. Things are about to get worse. All right, guys. Well, if there are no other questions or trade setups, we'll go ahead and wrap it up here. Again, we're likely to get this holding pattern. Things are kind of quiet. It's a little frustrating, but it's going to open up. So don't get FOMO. This is a good time to have all your levels mapped out. Know what trades you want to operate on over the next couple of days. And again, volatility is likely to be here as we get into that Thursday read. Yes, Ty, we'll be here on Thursday morning. I do apologize about last Thursday. Someone in the household, my daughter, came down with COVID, guys. So we had to kind of deal with that and get her tested. And we've quarantined the house by floor. So we're still all living through that 2 years in. And go figure, she gets it from school, even though they're all masked and the whole 9 yards. But we'll leave that conversation for a different forum. But guys, stay nimble here. If you're not into anything, have your powder dry, have the levels, like I said, mapped out. If you are in a trade and you've been trading this either dollar strength on this rebound, or if you're in some of the commodity moves, a good time to tidy up your levels, get a little bit more protective on your stops, because once we get those volatility swings, you want that turned upside down for no reason. All right, I'll shut up there. Guys, best of luck trading. I'll see you Thursday morning. Cheers.